a remote broadcast of Business World Live. I'm Jes Delos Santos. It's now 10:05 this Monday in Manila. We're half an hour into the trading day. Let's go straight to our top story. Inflation accelerated in July on the back of higher transportation costs. The consumer price index stood at 2.7%, quicker than the 2.5% in June and 2.4% in July last year. The July figure is higher than economists' median estimate of 2.5%. National statistician Claire Dennis Mapa says this was mainly due to an uptick in domestic airfares as well as tricycle and ferry fares. On the trade front, both exports and imports dropped in the month of June, but below estimates. Exports fell 13.3% to $5.33 billion, lower than the estimated contraction of 26%. On the other hand, imports plunged 24.5% to $6.63 billion, lower than the estimate of a 30.7% fall. This brings the trade deficit to $1.3 billion for the month of June. Moving on to the local bourse, the Philippine Stock Exchange increased the minimum public ownership requirement for companies that plan to list on the stock market. Companies applying for an IPO are now required to offer at least 20% to 33% of their outstanding capital stock to the public. The exact figure will depend on a company's market capitalization. Those with a market cap less than 500 million pesos should offer 33% of their outstanding capital stock or 50 million pesos, whichever is higher. Firms with market cap between 500 million and a billion pesos should have a public offer size representing 25% of their capital stock or 100 million pesos. Finally, companies with market cap exceeding a billion pesos must have a public offer of 20% of their outstanding capital stock or 250 million pesos. After listing, a company is required to maintain a public float of at least 20% at all times. The 20% minimum public ownership requirement also applies to companies that will list by way of introduction or will conduct a backdoor listing. Diversified Securities' Aniseta Pangan said these adjustments are expected to benefit the market by spurring liquidity, therefore helping address the susceptibility to price manipulation. And now let's have a quick check now what's happening in the local bourse. And as you can see here, things are looking green here. We are continuing that rally that we saw on Tuesday. The local bourse is now up by 1.5%, sending us to the 5,800 level, 5,860 to be exact here. According to some analysts here, there might have been some level of acceptance already coming from investors, which might have in a way bolstered or pushed shares higher on Tuesday, following that huge sell-off that we saw on Monday after Manila and nearby provinces were reverted to MECQ. It was, however, a thin trading on Tuesday, but nonetheless, the index was up 1% to 5,775. Now, according to Chris Mangon of AAA Southeast Equities, investors were more positive that businesses are better equipped now to work around the restrictions. Selling pressure was lighter, and that Monday's declines was a knee-jerk reaction to the lockdown. The government's move to heed the call of the healthcare workers, according to Chris Mangon as well, might just be seen by investors as a sign of renewed cooperation between government and the public. Now, according to Aniseta Pangan of Diversified Securities as well, investors might have taken cues as well from the BSP Governor Ben Jokno, who alleviated the fears of the effects of stricter restrictions. Now, Luis Limlingan of Regina Capital is saying likewise, that bargain hunters flock to local shares as corporate earnings stream in, boosted by positive manufacturing data out of the Eurozone. Now, speaking of earnings as well, let's have a quick check of some of the figures here that came in yesterday. Spirits not high here for San Miguel Brewery. You have net income for the first half of 2020 coming in slower, or at least coming down by 62.3% to 5 billion pesos. That's as revenues was also weaker, down by 39% to 42.8 billion pesos. Operating income as well, as you can see here, is down 61% to over 7 billion pesos according to the beer unit of San Miguel here. Weaker performance is mainly due to lockdowns here, with liquor bans in place for over 2 months rather. At the same time, you have to factor in as well the higher excise tax on beer. But according to their beer unit here, there might be some signs of hope here. Both San Miguel Beer and San Miguel Brewery rather and Ginebra saw signs of demand picking up by the end of the second quarter, with some areas already lifting their liquor bans. SMC President and COO Ramon Ang said, that there are signs of strong recovery in the second half, and they're also tightening their belts to keep posting profits and protect margins. One strategy for them now is to actually boost as well their digital presence. Now let's have a quick check of how San Miguel is doing so far at the start of the trading day here. As you can see, they are represented by this white line over here. They are down, however, by 0.6%, bucking that rally that we are seeing across the local bourse so far. Now let's move on to one other San Miguel unit here represented by the orange line here. I'm talking about Petron, still priced at 3 pesos and 9 centavos a piece here. Well, the oil refiner has widened its loss to a record in the second quarter. We're talking at least for the second quarter, that's around 9.3 billion pesos according to data taken by Bloomberg here. That is the biggest quarterly loss of the oil refiner since 1999. That puts their first half net income to a loss rather of 14.2 billion pesos. That compares to their gain of 2.6 billion pesos back in 2019. Consolidated revenues likewise also weaker at the first 6 months of the year to 152.4 billion pesos. They are attributing those declines to demand destruction, which led to a drop in oil prices. There's also a decline in oil consumption, with refining margins remaining weak, and they are bullish though for the remainder of the year. They are banking in inventory of about 3.5 billion pesos in the second half as prices recover. Yesterday, you have Petron. They were up 1 3/10%. Looking at how things are faring, however, at the start of the trading day, they are still higher, at least for today. Again, priced at 3 pesos and 9 centavos a piece. Now, moving on from San Miguel, let's have a quick check of 3 property players here, with 2 reporting higher earnings despite the lockdown. Let's start off with 8990 Holdings here. Net income for the first quarter of the year is at 1.3 billion pesos. That is higher by 12%, with consolidated revenues also coming in higher by 15% to 3.5 billion pesos. That's as they sold over 2,200 units in the first 3 months of the year. But things not looking so bright here for the mass developer, as real estate had to stop operations during the lockdowns. They are expecting a softening. That's according to Alexander Soto, the acting president and COO of 8990 Holdings. The focus for them now is to preserve cash to carry through the crisis. That includes a suspension of buyback program and adjusting their capex. Looking at their performance now here, they are, at least so far in the day, down by 0.8% as represented in this white line over here. Now, moving on over to this orange line, that is for Italpinas, the green developer. Despite the crisis, performing well, at least for the second quarter of the year. Net income was up 29% to 19.6 million pesos. Net sales likewise jumping 48% to over 144 million pesos. According to them, that's on the back of positive market response to their green products. And they are saying that lockdowns made people realize the need to live in a comfortable and sustainable environment. The stock yesterday was up by 2.8%. So far, the stock, as you can see here, still pretty much in the green here. They are now pricing at 1 pesos and 89 centavos a piece. And then lastly, let's have a check at how Double Dragon is performing here. Performing quite flat here, still pricing in 16 pesos and 10 centavos a piece. This after they raised $75 million from their debut offshore bond offering. Those are 5-year bonds at a rate of 7.25%. That is expected to increase their cash position. Add to that their plan for a 17 billion peso REIT IPO, the application of which is expected to happen within this month, with listing already slated for the month of October. Again, Double Dragon so far in the day still flat. Let's have a quick check of how specific stocks are performing. Again, we did see a rally earlier in the day. So far, that rally is being sustained. The index is still up 1.5% here. And I want to zero in here on Jollibee. As you can see, they are up 2 6/8%. That's despite posting a record net loss in the second quarter of 10.2 billion pesos. That pushes their overall first half net loss to 11.96 billion pesos. More of the details on how they performed for the first half of the year later on in the show. Now, here are other stories we're watching this morning. PhilHealth is facing the risk of collapse by 2022. That's if it doesn't secure additional subsidies from the government and if the pandemic persists. PhilHealth Senior Vice President Narisa Santiago told senators that the agency will no longer have any reserve funds by 2021. This as the Senate started an investigation into alleged corruption at PhilHealth after a whistleblower accused former officials of embezzling some 15 billion pesos through fraudulent programs. Santiago said PhilHealth will incur a net operating loss of 90 billion pesos this year and 147 billion pesos in 2021. She lamented that contributions declined while benefit payouts soared amid the pandemic. However, Senator Ralph Recto rejected Santiago's claims that PhilHealth funds will soon run out since contributions are mandatory. The lawmaker noted that taxes imposed on various products like sugary drinks and alcohol are already earmarked for PhilHealth. Recto said it should be effortless for PhilHealth to raise revenue because it's in the law. Now, moving on to another agency, SSS has approved over 15 billion pesos worth of calamity assistance loans during the pandemic. That's on top of disbursing another 119 million pesos in unemployment insurance benefits in July. SSS President and CEO Aurora Cruz Ignacio said that the calamity loan programs were approved for more than 1 million applicants between June 15 and July 28. This means each person was granted at least a 15,000 peso loan. Clap for COVID-19 runs until September 14 with a fixed interest rate of 6%. Meanwhile, the UIB program benefited almost 14,200 applicants between July 1st and the 27th. Unemployed SSS members can avail of insurance benefits equal to half of their average monthly salary for up to 2 months. That's if they are involuntarily separated from employment. Online application and filing of SSS claims are now mandatory. These include benefit claims for sickness reimbursement, salary loans, and funeral costs. The state-run pension fund has also started releasing UIB and funeral grants to members through electronic payment channels. Now, this from the Philippine Star. Metro Manila and neighboring areas have come in and out of lockdown, but the DSWD has yet to complete the distribution of SAP benefits. The second tranche should have been fully distributed last May, but the department is now promising to finish the dole out by the middle of this month. As of August 4, only around 9 million families have benefited from the 60.7 billion peso aid under the government social amelioration program. While the DSWD's original target is to assist over 14 million households with a budget of 96 billion pesos. The budget department also reiterated that the program's entire budget remains intact and had already been given to DSWD. The Social Welfare Agency attributes the delay to the many obstacles they faced during distribution. These hindrances range from duplication of aid to unliquidated cash from the first tranche of the program. More of the economic and corporate news when Business World Live returns after a short break. Stay with us. Good morning. You're still watching Business World Live here on One News. I'm Jes Delos Santos. Again, July inflation rising to 2.7%, putting year-to-date consumer prices at 2.5% so far. Still within government targets. Let's make sense of this, as well as other data on the economic front. To help us, we have Calixto Chikiamco, a columnist at Business World, and also the president of the Foundation for Economic Reform. Good morning, Sir Calixto. Thank you for joining us in the show this morning.
Good morning, Jess. Thank you for having me.
All right, sir. First, your thoughts. July inflation again at 2.7%, beating analyst estimates of 2.5%. That also puts us at 2.5% a year to date. Your reaction, at least.
Well, it's just nominal. I mean, it's just only 0.2%. At the same time, it's not unexpected given the new health protocols. And as you mentioned, some of those cost increases were from domestic plane tickets and also from public transport, where they have to observe physical distancing and therefore fewer passengers per vehicle.
And that pretty much is still within benign territory here. How do you think might this in any way influence the BSP in their next policy actions moving forward? Or is it at least time for the central bank to hold off for now?
Well, right now, especially with the new MECQ, I think demand will continue to be very soft. And I'm sure the central bank will factor that in whether to lower interest rates further or. But as of now, really, the market's very liquid. The problem really is demand is very weak, and therefore, inflation is quite mild.
Mm-hmm. Now, also, you have other data coming in, trade data. June exports falling 13.3% to $5.3 billion. Imports likewise dropping 24%, putting us at a trade deficit of $1.3 billion, narrower than last month's, and all things considered, lower than what economists expected. Your thoughts, does this mean recovery might in fact be already in sight?
I think it is too early to say, especially now. Again, we have moved to another lockdown, which will create a lot of uncertainty for businesses, whether how they will move forward, given the uncertainties about containing the pandemic and also the uncertainties of the government response. Whether, again, down the road there'll be another lockdown. So business will probably hold off in even in maintaining their operations.
Mm-hmm. And so much of this uncertainty, I mean, MECQ is just slated for the next 2 weeks here, and you have the central bank already alleviating fears, saying that the impact is going to be limited. But how do you think might that affect the sentiment of investors?
Oh, well, as I said, the biggest concern of investors is really that there is no plan to contain the pandemic. We are already, I think, number one in terms of cases in Southeast Asia, and still the government has to resort to very stringent lockdowns, which take a huge toll on the economy. So the government has to find some other way to contain the pandemic rather than these hard lockdowns, which cost the economy a lot.
Mm-hmm. And at the same time, sir, we're expecting GDP figures tomorrow for the second quarter. What's your outlook? Are you joining the chorus of voices saying we might see our deepest contraction yet?
Oh, yes. I think we will see our deepest contraction during the second quarter. I think I joined with some of my colleagues who think that contraction can be as much as 10%, double digit, for the second quarter. So it's not going to be pretty.
Mm-hmm. But do you think that a 10% contraction would be somehow still tolerable for the economy?
Well, again, it depends if you are projecting a swift recovery, a V-shaped recovery, but I don't think that's going to happen. We're going to see an L-shaped recovery, in fact, a long L. Given the uncertainties of this pandemic, they say, of course, that a vaccine is around the corner. But again, there's still a lot of uncertainties of the expense of this vaccine, the effectivity, how long it would take. It might turn out to be like AIDS in the sense that there's been no vaccine developed for AIDS. So that's the biggest problem. A lot of uncertainties in the future.
L-shaped recovery, sir, do I take it to mean you don't see things picking up by the third quarter, just like what some economists and some of our economic managers are at least hinting at?
Well, of course, if the economy opens up, there will be some recovery, but we are going to be far off from where we started, the pre-pandemic levels. So you'll just have a base effect. Maybe you can see some increase, but going back to our GDP per capita before, I think that's going to take some time.
So definitely no signs of a Merry Christmas, at least for the year, do you think?
Oh yeah. Especially for the millions of unemployed. As of April, I think there were 7 million unemployed, and labor participation went down. So the employment picture is very grim.
And speaking of which, again, that's one of the main driving force of the economy, employment, and that's been seeing declines like what you did say, unemployment jumping to a record 17.7% in April, and the ADB is saying that's bound to peak some more in June at 22%. Do you expect the situation to just get worse from here on?
Yes. Again, with consumer spending not picking up because of the fears of the virus and with no clear plan. At the same time, the problem is so far what we're given is really fear of everything. And consumption spending is about 72% of the economy. So I think it's going to take some time before consumer confidence comes back.
But at the same time, since lockdowns were eased primarily a few months after quarantine measures were put in place, do you somehow expect some form of recovery in terms of employment since lockdowns were already eased?
Oh yeah, some maybe from the June levels there'll be probably some temporary increase, but the problem is that mobility is very much restricted. So even if you say that you have loosened the restrictions, people still can't go to work. So that has limited the recovery, even if the government had loosened the restrictions.
And would you have any picture at least on which particular work segments were badly hit by the pandemic?
For sure, those that require a lot of interaction, tourism, events, the events business, retail establishments, so all that activities that need, physical contact, those businesses will really be badly affected.
Now,
And of course, I just want to say that, of course, the problem also is OFW remittances have dropped significantly, and all those businesses that sort of depend on OFWs will be also affected.
and that in a way also affecting employment numbers as well. And since while we're at it, remittance likewise plunging by 19%, the highest in decades. Now, how should authorities offset this?
The reduction in remittances.
Remittances, exactly, sir.
Well, I don't know how much they can do to offset the remittances. Of course, it's fortunate that we have record international reserves to cushion us from this reduction in remittances. So I think though that the government should do some stimulus spending. As of now, I think the amount in the Bayanihan 2 is quite small. I think it's about 140 billion. So I think it's not going to be enough. at the same time, the Create bill is mainly about tax cuts. And I'm not sure that companies will start investing just because there are tax cuts. After all, a number of them are facing losses. So even if you have a 5% reduction in income tax, if 25% of zero is still zero.
Mm-hmm. So, meaning to say, sir, you think that the current stimulus packages are not enough to somehow bolster or support growth rather. At the same time, you have lawmakers wanting bayanihan to be reviewed, saying that the 140 billion pesos will not be enough, especially now that you have NCR and surrounding provinces reverting to MECQ.
Yes, if you're talking about those two packages of Create and Bayanihan 2, I think that's not going to be enough. However, I think Congress has put up a rice bill, which is about 1.3 trillion. But it wasn't mentioned by the president in Isona, so I don't know the fate of that bill. It was already approved by the House. So I don't know if the Senate will take it up. But certainly, I think a much bigger amount than the 140 billion is probably called for.
Okay, and lastly, sir, what's your growth outlook for the country? When do you see recovery happening at least?
Well, for the entire year, I probably GDP growth will be in negative territory. I joined with my colleague and fellow columnist Romy Bernardo in projecting about 7% contraction. It's probably the most pessimistic of the others, but I think it's realistic, especially given the fact that, again, there's no clear path forward in managing the pandemic, and we keep having this intermittent stop, start, go type of economic activity.
All right. Thank you very much for your insights, Sir Calixto Chikiamco, a Business World columnist and also the president of the Foundation for Economic Reform. Thank you, sir.
Okay. Thank you.
All right, let's have a quick check of how local shares are performing. We are extending that rally. As you can see here now, the index is up 1.5% to 5,862.83. We are again extending that gain that we have seen at least on Tuesday's trade here. Again, we are up by as much as 1.5%, and over the past 3 days, we are already up 1 1/10%. Looking at how some specific stocks are performing here, let's have a check. Earlier in the day, a number of stocks already, quite a lot, in fact, are already in the positive territory and still maintaining that rally here. Metro Bank still the top gainer here, over 4%. But at the same time, very interesting here, Jollibee is up 3 7/10%. That's despite reporting a net loss of 10.2 billion pesos in the second quarter. That reflects a slump in consumer spending. This is also their third quarterly loss, according to Bloomberg. Net loss is at 11. According to data from Jollibee, net loss for the first half of the year is already at 11.96 billion pesos. In fact, system-wide sales were down 48% to 30 billion pesos in a second quarter alone. At the start of the quarter, 50% of Jollibee stores had to close. By the end of second quarter, 88% of the network has already opened, but still heavily reliant on delivery and takeout services. Results were bad, but in line with forecasts that is according to JFC CEO Ernesto Tanmanchong. They are expecting sales to improve within the next few months, despite those negative numbers here. As you can see here, they are pretty much in the positive territory in today's trading, up 4% to 131 pesos and 20 centavos a piece, pretty much joining the rally that we are seeing across the local bourse. And that's a first look into the business day this Wednesday, August 5, 2020. Catch us again tomorrow at 10 a.m. I'm Jes Delos Santos. We are One News.